Is the price of gold being manipulated? This has long been a subject of debate among economists and gold investors. There are many myths about gold, its function, history, its role as an investment, and how gold applies to the modern monetary system. To better understand the benefits of gold and dispel the many myths surrounding this precious metal, we will hear from Jim Rickards. Jim Rickards has held senior positions at Citibank and has testified before the U.S. House Science Subcommittee on Oversight about the risks and dangers of financial modeling and the 2008 financial crisis.
Now central banks have become net buyers, not only Russia and China, which are by far the two biggest, but you see Iran, Turkey, Philippines, Kazakhstan, Vietnam, Mexico. These are all countries that are adding to their gold reserves. And of course, the U.S. hasn't sold any since 1980, any significant amount of gold. And suddenly in 1980, the price of gold exploded, went over the course of from 1971 to 1980, went from $35 an ounce to $800 an ounce. So all this is pointing towards tighter and tighter supplies. Now, I just returned from Switzerland where I met with the head of the world's largest gold refinery. He told me that he's back ordered. His customers want more gold than he can sell, than he has, and he's having difficulty sourcing it. And he said, China wants to buy a lot more than I can sell them, but my plant's working 24 hours a day. I can't sell them anymore. Meanwhile, I'm having difficulty finding the gold in the first place. So you've got these massive buying programs from Russia and China, acute physical shortages, and it's leading up to kind of the mother of all short squeezes. We'll see how it plays out, but my advice to investors is get your gold now. What are you waiting for? People say, well, I'll wait for the price to go up. Well, it'll go up. You can count on that, but you may not be able to get the physical gold when the time comes. So the time to get it is now. Now, with China still buying, see, China has an interest in a lower price. If you were out to buy 3,000 tons, you wouldn't want the price to go up. Eventually you will, but not yet because you're still a buyer. So I'm not completely confident that the Shanghai Gold Exchange will escape manipulation by the Chinese government because at the end of the day, they still favor slightly lower prices because they still want to buy some. And so my advice to investors is, hey, if China is sitting on the price of something that's bound to go up, why don't you get some now at the bargain price? And I hear this a lot. People say to me, well, Jim, I hear what you're saying, but if it's all manipulated and there's all this price suppression, why should I buy some? Because these governments, 500-pound gorillas like China are just going to squash the price. How am I as an investor ever going to benefit if the price is getting squashed? And my answer is that gold is being manipulated, but it's been manipulated over 100 years at this point, at least since 1914, and all the manipulations ultimately fail. So yes, it was manipulated during World War I. It was manipulated in terms of price in 1925 when the UK went back on the gold standard. It was, you could say, that Bretton Woods was a manipulation because they fixed the price a certain level. The London gold pool of the late 1960s was an effort to squash the price. It failed. The US dumped another 1,000 tons in the late 70s. That failed. The UK sold their gold. That failed. So the manipulations are there, but they always fail. And so my view of it is when you see a manipulation aimed at suppressing the price, it's a gift. Some very powerful government is giving you a gift there because they're sitting on the price. Buy it at those levels, and then when the manipulation fails, which it always does, and the price skyrockets, you win.
As the Federal Reserve props up the strength of the U.S. dollar with high interest rates, this lowers the price of gold. This is the opportunity. With the inevitable Fed pivot and monetary easing, gold prices will rise. To paraphrase the famous hockey player Wayne Gretzky, I go where the puck is going to be, not to where it was. He also stated, you miss 100% of the shots you don't take. To attend an educational webinar on gold investing held by Augusta Precious Metals, see the link in the video description. Thank you for watching.